Good morning, everyone, and welcome to our DAT IQ weekly market update. This is our update for June 29th, 2021, our last update for June and our last update for the first half of 2021. So welcome and thanks for joining us. My apologies for missing last week. I was in a bit of a tight spot, if you will, and couldn't dial in from the hospital recovery room. We were welcoming little Forrest to the world. I want to welcome our guests. We have Dean Croak, as always, who's our principal industry analyst, and a special guest this week, Dr. Chris Kaplis, who's the chief scientist here at DAT and heads up the CTL at MIT. Welcome, guys.
Hey, Ken.
Glad to be here, Ken.
Hi, Chris. Congratulations on the new boy.
Thank you. Yeah, it's been fun. A little bit sleep deprived, but thank God for coffee. I think in my short stay at the hospital, I had 9 Starbucks ventis.
Nice.
They were worried. I think they were taking my blood pressure more than my wife's, to be honest with you. So for those not familiar, we're here every Tuesday, except next Tuesday. Before I forget to mention, we're going to take the 4th of July week off. We're all dressed in our Independence Day, red, white, and blue, celebrating this week. But we will be taking next week's show off. But we're typically here on Tuesdays at 10 a.m. Eastern, 7 a.m. Pacific, talking about the freight market, what we're seeing, and most importantly, answering your questions. So if you have any questions, please feel free to drop them in early. We have Chris with us this week, who is our shipper expert on the data analytics side. So if you have anything shipper focused, retail, CPG, things like that, please drop them into the comments because you'll never find a better time to ask someone about those questions. I'm going to dive right into our key points of the week because we have quite a busy show this week and it'll get us moving along. So this is that typical 2-week period that we talked about last week heading into the 4th of July. Where things really ramp up. We're starting to see that in the data for sure. Dean's going to cover that in more detail. What we're seeing on flatbeds is really interesting as well. Dean, again, is going to cover that, but it's really mimicking the pattern that we saw, albeit at a higher level in 2018 for flatbeds, which is kind of a very interesting phenomenon. 10th Street driver application activity. So 10th Street is a software platform that helps companies onboard and manage drivers. They have some really cool data around onboarding and kind of just general driver activity flows. That turned up positive in May, 13%. Again, Dean's going to help us with some implications there. And then it seems like some of the things are starting to mitigate around the bridge in Memphis, delays down to just 15 minutes. But a lot of that's due to the fact that trucks are finding and settling into diversion routes. So with that, I'll turn it over to Dean, and he'll walk us through our update this week. Take it away, Dean.
Yeah, thanks, Ken. Dry bed load post volumes came back last week, as Ken mentioned. Shippers are obviously pre-positioning a lot of freight ahead of Independence Day, which leads to our DAT IQ question of the week. And what I'd like you to do is drop your answer to this question in the chat box, and we'll let everyone know who the winner is at the end. But the question is essentially, how many truckloads of freight do you think will be pre-positioned ahead of the upcoming 4th of July celebrations? And I'll give you some tips. We're going to consume 150 million hot dogs this weekend, 190 million pounds of beef and pork, about 750 million pounds of chicken, 63 million cases of beer, and about 4.7 million cases of wine. So do some quick math and drop it in the question section on the show, and we'll answer that towards the end. So in the spot market load post volume section, volumes increased 17% last week. No surprise there. Capacity tightened also. There were fewer load posts. So as a result, the load to truck ratio increased to 6.42 from 5.17. Over on the refrigerated sector, a lot of volume, obviously, this time of the year is in the refrigerated sector. Load post volumes jumped 20% last week. Compared to last year, reefer load post volumes are up 32%, also up 32% on the heady days of 2018. Capacity tightened also last week in the reefer sector, so the load to truck ratio moved up to 14.21 from 11.11. In flatbed, a little bit different story. Load post volumes dropped again last week. They're down 24% month over month. Definitely less volume in the spot market on the flatbed sector. It's been trending down for 9 weeks in a row now. But very little change in equipment posts in the last 3 weeks. So as a result, the load to truck ratio dropped to 60.57, a long way south of where it was a few weeks ago at 100. Over in the dry van market condition index, having a look at a couple of lanes, focusing on the Los Angeles to Phoenix run, only 372 miles. Rates are up to $4.44 a mile, excluding fuel this week. It's 12 cents a mile higher since last week and up $1.42 since February. So very high rates on that particular e-commerce lane. You'll remember last week we talked about Phoenix being one of the growth markets last year. In fact, it was one of the highest growth markets in the big box e-commerce warehouse space. On the Los Angeles to Stockton run, rates reached $4.25. Again, another big warehouse market reflecting a lot of import volume coming into the San Pedro complex. Over on the East Coast, Atlanta to Orlando, one of the busiest lanes in the DAT business, rates are up to $3.89 per mile. That's the highest ever recorded on that 440-mile lane. Rates are up $1.08 since February. So having a look at the refrigerated sector, some USDA data came out last week, reported a shortage of trucks to haul onions last week out of the Albuquerque market. Loads to Denver reached an all-time high at 326 out of Albuquerque. Albuquerque to Orlando, 1,700 miles, spot market rates averaged 258. That's up 49 cents a mile since February. Even loads to Atlanta, which have averaged around $2 a mile over the last 12 months, were as high as 243. In the number one port crossing zone for commercial trucks in Laredo, Texas, loads to Atlanta averaged 307 this week after climbing steadily since May last year when they were just $1.91. So that's a 60% increase on that big produce lane there. Slightly east in Mobile, Alabama, rates skyrocketed last week to $3.29 a mile. That's up $1.40 per mile since this time last year for loads to Atlanta. Having a look at the flatbed market, one market that caught my attention this week was Las Vegas to Salt Lake City, only 300 miles, but rates reached $3.23 per mile this week. That represents an increase, though, of 91 cents a mile since February this year, so capacity very tight on that lane. And on our number one lane, Houston to Lubbock in the Permian Basin, we see a lot of volume there in terms of loads moved and loads posted. Rates are currently $3.32 per mile. That's up an amazing $1.62 per mile since this time last year. So that's more than double on that particular lane. Part of the reason is the Baker Hughes drilling rig count stands at 221 this week. That's also double compared to this time last year. Oil, WTI, West Texas Intermediate oil at 73 barrel is also helping a lot of that investment in that part of the world and need for drill pipe casing and other propellants that they need for the fracking business. Having a look at the year-over-year spot market rates, seasonality returned to the market a little bit last week. Dry van spot rates increased 3 cents a mile to $2.38, excluding fuel, about 39 cents a mile higher than the same week in 18, and about 80 cents a mile higher than this time last year. In refrigerated, they recorded the biggest gains last week. Spot rates increased 5 cents a mile to an all-time record high of $2.75, excluding fuel. That's 78 cents a mile higher than this time last year. And wrapping up with the flatbed market, rates have been sort of working in this very tight band between 270 and 271 a mile for the last few weeks. Last week, rates went up at 1 cent a mile. The week prior, they went down 1 cent a mile. So this week, they're sitting at 271 a mile, but clearly plateaued at around this 270 a mile mark. Still 78 cents a mile higher than the same week last year and about 25 cents a mile higher than the previous sort of high water mark in 2018. So that's it for this week's market update. If you'd like to find out more about what's happening in freight, go to dat.com/market update and download our weekly report. Over to you, Ken, for the short-term forecast.
Thanks, Dean. So you guys may notice that Ned is absent this week. He's on vacation on the Pacific Coast. I'm assuming enjoying the very warm weather. So I'm going to try my best to kind of stumble my way through this. One of my data scientists asked yesterday if I needed any support, and I said no, and they followed up with, "Are you sure?" Which is, I guess, a bit of an ominous statement. So we're going to walk through our short-term forecasts leading with dry van. So to level set everyone on this chart, the blue line is the historical rates observed by DAT, and then we have three flavors, or actually four, if you will, the forecast. So we have the short term, which is the red line. We have green, which is the actual ratecast forecast that you would see if you went into any of our products or pulled any of our data through API or Snowflake or anything. And then we have two types of blended. We have a yellow blended and a gray blended. So one tends to lean more towards ratecast. The other one tends to lean more towards the short term. So the takeaway here on the dry van side, I think, is that ratecast is showing pronounced strength heading into the 4th of July and then cooling off as seasonally expected. What it's picking up on there is the long-term trend. There's not a year we have on record in our 10-plus year rate view history where rates didn't cool off after the 4th of July. last year was a bit of a different story, but still we saw some at least short-term cooling before things sort of exploded into the second half of the year. The other two models are showing the uptick for the fourth and then even more rapid cooling. So I'm going to move over to reefer. This is one where you really see that 4th of July spike, especially if you look at the short-term line, the red line. But again, all showing cooling after the Independence Day holiday. This is one I'm interested to see what you guys think if you want to drop a thought in the comments, because there's a lot of debate on whether things actually will cool off post 4th of July. I mean, a lot of that produce will have already moved through, but there's still going to be the kind of very steady return to normal as it is around large gatherings, sporting events, summer wedding season. Dean has kind of intimate knowledge of the catering business and how that's been picking up. So it'll be interesting to see what happens with refrigerated if it behaves typically over the summer. And then we're going to end with flatbeds. This one's probably the most boring of all of the charts. It's essentially a punt across all 4 model projections. It's basically just showing it flat. And I think the model's just really looking for direction. We're sitting at that sort of all-time high in our recorded data set, really trying to figure out whether it's going to be like 18 and then really, really cool off in the second half of the year or continue to show strength. That's it for the short-term forecast. I know I did a very poor job of imitating Ned, but that's because I have far less letters after my name. With that, we're going to turn to the Ask IQ question of the week, and for that, we'll turn it over to Dean.
Yeah, thanks, Ken. What I would like to do is just have a little bit of fun with it this week. The IQ question of the week is essentially how many loads of freight do you think will be pre-positioned in the market ahead of 4th of July. Of course, a lot of that freight is being pre-positioned over the 2 weeks leading up to that, but there's a lot of commodities that will move late this week, especially cherries that have to get to market pretty quickly, things like avocados. So some of the data is kind of fascinating. I'll give you some ideas. Drop it in the chat section about how many truckloads you think will be moved as a result. This is kind of back of the envelope type math, but 68 million cases of beer. It's by far the biggest commodity that will move this Independence Day, around 26,000 truckloads of beer. It's about a third of the volume, to give you a sense of what the total number looks like. But it includes chicken, watermelons, fireworks, wine, beef, popsicles, tomatoes, pork. There's any number of things that are being moved this week. A lot of refrigerated volume. So have a look at the market. Give me your sense of what you think it'll be. I'm not sure what the prize will be. We haven't thought that far through. But drop in the chat section how many loads of freight do you think will be moved in the next few days and leading up to 4th of July.
What's your guess, Chris?
The actual number of trucks, I have no clue. No clue. My guess is if it's not there now, it's not going to get there. The retailers and the CPG manufacturers that I talked to late last week said that's already gone. We're worried beyond 4th of July. Cherries might be different, but most of the other stuff, whether it's soda or beer, my guess is it's already there.
I need to get some of that delivered to my house. I had one 12-ounce beer over the weekend, and I fell asleep in my chair.
Hey, Dean, do you think that the shift to outdoor, there's probably more demand for kegs than there have been in the past 12 months? I wonder if that's shifting, if that's a production issue.
It's a great question. I hadn't thought about that.
It's still really hard to find cans, whether it's beverages or my father-in-law was just complaining this morning. He was trying to find pie filling, and he went to like 3 different grocers trying to find canned pie filling. And there's still breweries around where we live in Ohio that are printing in their old winter cans, right? They're slapping a new label on top of a clear Christmas can. So that shortage is still very, very real.
So
my guess would be 25,000, by the way. I have no idea what the actual number is.
All right. Okay, good. I'll take that down. I think the other thing, though, Chris, I'm seeing, if I look at the younger generation, my teenage boys sort of in their early 20s as a benchmark for alcohol consumption, they drink a lot of hard seltzers, like a lot of, seltzer-type drinks that have an alcohol content in them, as opposed to beer, so maybe there's a generational effect. I'm not sure, but that's something I noticed this year is a lot more of those sorts of sort of more boutique drinks.
I've noticed that too, but hopefully when you said teenage sons, you were talking about them being in their 20s, right? Because the drinking age in this country, Dean, is 21.
Because it's 18.
Yeah, but the millennials, they love the White Claws because there's no law when you drink in White Claws.
That's what they say. There's no laws except, driving over the limit or any of that kind of stuff. I would highly recommend obeying those laws. It's amazing how that segment has just blown up. I have two really good friends of mine that are in international export of beverages, alcoholic beverages, wine and spirits. And the seltzer market is just worldwide by far and away the fastest. I mean, triple digit growth the last 3 years.
Do you guys remember Zima?
I do remember Zima.
Yeah, it was horrible, but there was like the breathtaking, it led the way. It paved the road.
That was a malt beverage though, like the Seagram's coolers and all that stuff. These seltzers are different. Now a lot of the microbreweries are trying to do it, but it's one of those things that it's really hard to do unless you're a big commercial operation, like to get that level. And they all taste like crap. Like all the micro ones that I've had taste like bready, like if you eat raw dough, because they don't have a way to like scrub the yeast out of it.
Right.
But so we have a couple guesses. Well, you need to go on record, Chris, as an official guess. I went 25,000.
I'll go 25,001.
Oh God! You can have your pet spayed and neutered too. Someone guessed 90,000. Youssef guessed 90,000.
That's pretty good. That's not bad. Good. All right.
So is this a number of trucks that are being positioned this week? Is that the idea?
So it's the amount of freight that has to move to pre-position in weeks leading up to 4th of July celebration. So it's not so much. I mean, a lot of the super perishable stuff will move this week. The growers that are timing certain crops for the market for this weekend's in terms of peak prices per pound. But you're right. A lot of that beer and other freight will be pre-positioned in markets. For sure.
So my growing up in 4th of July, everything has a shelf life of about 6 months. Hot dogs, hamburgers. So not many vegetables on my house on 4th of July. I don't know how things are in Ohio.
Oh, it's all. I mean, if it's not preserved food, it's not getting on the table.
Yeah, why bother? Why bother?
So
when I talked to some retailers in CPG, they said this time of year, it's wicked busy up until this week. They called it normal amount of controlled chaos, which I thought was pretty good. But the thing that most of these guys were worried about is capacity, because this is the number one, top 1 or 2 times for personal time off. And so they're finding it hard to get capacity for the next thing, which is the back to school. And that kicks off on 5 July, 6 July. And so pre-positioning that is what a lot of the retailers are worried about, especially this year, because back to school really means back to school. And the parents are going back to office. So people have to buy pants, and buy apparel. Makeup and blouses and apparel. So I think we're going to see this peak from 4th of July kind of continue on. My bet is we're not going to see this nice drop off. I think we're going to sustain through July and August, not for reefer, but I think for dry van. I think that's going to get pushed through.
There's still a really healthy throughput of container vessels on the West Coast also. Yeah. I looked online this morning, 40 vessels in the San Pedro complex this morning, only 12 at anchor. So to give you a sense, that throughput is pretty good because they had 41 at anchor on the 2nd of February, 41 at anchor, down to 12 today. And they've been able to maintain this fairly high throughput. So they're definitely pushing more volume, but I think the amazing statistic is that they've got a lot more vessels coming in at the moment, a lot more containers at a time of the year when it's quiet. So you're probably right in terms of the flow-on effect of those high-level imports into the trucking market.
But I wonder.
Do you think it'll? Go ahead.
Go ahead. The unloading, we know how that's going through. Do we know how the clearance of containers through customs and that is going? Is that where the bottleneck is?
Well, I haven't heard a ton about the actual customs clearing process. I've heard more about the unloading, and then the drayage is just an absolute disaster right now.
Oh, okay.
Especially on the West Coast. I mean, I've heard horror stories about drayage. And then you're starting to see these, 2,000-mile drayage moves. It's like, what? especially like I think there's obviously a more established dray network on the West Coast ports, but we're seeing a lot of these like out of Baltimore or Savannah, basically just going all the way to the consignee as opposed to like trans, because you're just you're injecting another failure point if you're trying to, and there's no cross dock space. A lot of the cross dock space has been cannibalized for short-term warehousing. Like that's a stat I'd love to get my hands on, is like the file of applications to because cross docks by and large, the operators of cross docks typically don't have warehousing licenses or the permits needed to like warehouse for more than a day or two, right? So I wonder if we could ever get our hands on like how that's transitioned through the pandemic. How many cross dock operators have realized that they could find a more lucrative niche in setting up short-term warehousing as opposed to just cross-docking.
That'd be interesting. I found talking to manufacturers, they can't keep any inventory in place. I was talking to General Mills a couple of months ago, and they have been shutting down a lot of their auxiliary fulfillment centers because they used to have a spillover because they just can't keep it in demand. Now, I wonder if that's shifting now that the economy is opening up. I'm not sure.
Well, I wanted to ask you, now that you're on, is how do you think, like, so is it accounting dependent how these shippers are thinking about inventory, right? Because I think about a 2x4, right? We were talking about that before the show started. If I'm getting it right now, let's just say the retail price is $9 a 2x4 and the wholesale price is $6. So I'm adding those to my inventory at $6 a 2x4. And the normal kind of long-term average price for that is $4. So it's a very classic bubble example. Mm-hmm. How willing are these retailers to stock up on inventory knowing that, depending on their accounting method, they could be dramatically underwater on their balance sheet in the next quarter or two?
Mm-hmm.
Yeah, I think it depends on the commodity, right? So you picked an extreme case. If I'm looking at food coming in, I'm not seeing the price jumps as high. I've seen commodity issues in copper, lumber, other things. I haven't seen too much in the food products. Have you? Because that's where I've been talking about
meat.
I think it would be a question you would limit your amount of inventory you would acquire.
I think it would be limiting. That's my at least initial thought about it, but I guess it depends on if you're doing LIFO versus FIFO versus a weighted average cost across your entire inventory. I mean, the food, what I'm seeing in food is more in the meat, right? So 4th of July, we were looking to buy ribs. I love to barbecue. My ears usually perk up when a rack of ribs goes over $10 a rack. They're for baby backs, right? Going to Costco this weekend, a 3-pack was $58. We buy the frozen beef patties, right, for hamburgers. They're normally $17.99. They have been for years, $24.99. I mean, small dollar amounts, big percentages, and we're seeing it kind of across the board. I know this sounds silly. Seafood doesn't seem to be as big of an impact as beef and poultry and pork. But I'm curious how the inventory strategy is going to play out in the second half of the year. I mean, I don't know if you caught, not to call anyone out, but FedEx has released their peak surcharges last week. And it's remarkable. I mean, I've never seen anything like that. Do you happen to catch that, Dean or Chris?
I did not.
So they're pegging the volume for the surcharge scalers to February 2020 volume. No, February 2019. Was it? Which one was it, Dean?
I'd have to research it, Ken. I think you're right. It was 19. Was it 19? I think it was 19.
Yeah. And I mean, they're remarkable. I mean, these e-commerce players, these retailers that are shipping a lot of parcel are going to see a substantial increase in their pricing over peak. So I think at least things are shaping up to be really, really busy this fall.
I agree. Yeah, I don't see, the cycle will kick in at some point. Like some people are talking about that it'll never end, right? But it will. It will. We'll see how the capacity catches up.
It will for sure. Dean, you want to go through some of the guesses?
Yeah, I just saw Stephen Linton popped in at 40,000 from Maya Foods, Richard Barber at 92, Freightworks at 125. We've got Yusuf Kansei at 90,000. He's pretty close. So are we ready to call it? We want to.
Are we guessing to what your estimate is? Is that what we're doing?
I went through the actual number of pounds, retail sales, converted to the truckloads, and came up with a.
You didn't submit your own guess, did you, Dean? Okay, just checking.
Okay. I was always curious about how much freight moved and converted all the. We're going to spend something like $7.1 billion this weekend, like in terms of total consumer sales. The more amazing statistic is we'll consume just over 7 billion hot dogs between Memorial Day and Independence Day. It's like grilling season. It's a fascinating statistic. But the winner is 90,000 is the closest. So Yusuf gets from General Brokerage Services is the closest at 90. The actual number is closer to 72,000. Is how the number plays out. 72,000. Beer is by far the biggest volume. It's the heaviest, of course. 37% of truckloads will be beer, 22% chicken, 10% watermelons. Then we go down to fireworks at 8%, beef at 4%, etc. So that's the number, 72,000. So congratulations, Yusuf. You get the prize, whatever that might be. We'll figure that out.
No, I thought if you guessed above, you don't get it. You have to be below. No, is that different rules?
We can make it up as we go.
So I have a correction. I want to apologize to FedEx. I was actually referencing UPS's peak surcharges that came out last week.
Oops.
Oops.
Freudian slip, perhaps, given my history. But so it's pegged to 2020 volume, February 2020. So like the slowest month in the last 20 years, unless you were shipping toilet paper or bottled water. And it starts at 110% of volume. It sure posts $1.15 a package and then ramps all the way up to anywhere between $5 to $6 per package increase.
Wow.
And it's progressive all the way up to 500% of those 2020 volumes.
Yeah, their new CEO, Tomei, has been really aggressive in paring down customers and really getting the pricing right.
And getting rid of UPS freight.
Yeah. Who bought that? Was that TFI? Who bought UPS freight?
Yes.
The old overnight?
Yep, Canadian company.
Yeah.
We're seeing all of these truckload not all. We're seeing a ton of truckload and LTL carriers put in substantial peak surcharges, and it's very, very early in the calendar year to be doing that. First of all, now I think about it, FedEx, the news article I was thinking about is they cut LTL service to 1,200 customers.
Right.
And of course, we've got the intermodal business on the other end in terms of tight capacity and a lot of those facilities being landlocked with inability to store additional containers and chassis trailers. So I think, Chris, to your point about ongoing demand staying elevated, some of that volume's got to flow over to the truckload market as that intermodal reaches sort of its capacity limits.
Right. We'll
if you can find a container or chassis right now, right? I mean, that's the game. But Matt Clark asked, what's the fishing forecast over the July 4th weekend? I'm sad to report this heat wave has pretty much obliterated the cold water trout population in our typical stomping grounds. They don't do well in mid to high 90s with 100% humidity. So I think it'd be great if you were out there bass fishing, but I don't think my family would be too happy if I went out on a boat right now and ditched my wife with the three little ones. I think I might have a Godfather Fredo moment if I did that. Yeah. For anyone familiar with the movie.
Yeah, you might not come back from the fishing trip.
Yeah. Victor asks, what percentage of the current rate increase how much of the current rate increases are inflation? How much of them are short-term sort of market fundamentals? Chris, what do you think? You're probably the best suited to answer that question.
I've looked back over the last 8-10 years. It's been a steady 3 to 4% inflation if you look with the bumps going up and down. So if you peel that off, I think we're right now, if you look over the last 8 years, we're on a compounded annual growth rate of about 5% now, but we're still on a peak. So I think you could peel off 3 to 3.5% for inflation, and the rest is peak surges, rate increases because they can, and getting the demand.
I think it's about right. I mean, I think we could have the way that it works. So that's, I think, on the shipper side, right? on the carrier side, the way I think about it is I think we'll have a higher on paper year of cost increases this year. It could, driver pay could go up 5 to 10%. But I think the way that usually works they don't usually claw it back. What will happen is you'll just go an extra year or two without seeing a driver pay increase. So it might be 2022 or 3 might be a 0% increase year to sort of amortize this year out a bit.
But Ken, do you think you're talking about some grocery rate increases that you've seen for common goods? Do you think that's going to stick? Do you think that we're going to see inflation coming in Q3, Q4, or even into Q1 of 2022? Or do you think it's just a bubble until demand and supply match?
I hope not. I mean,
you hope what? That it doesn't balance out?
No, I mean, I hope that this isn't here to stay.
Yeah.
I don't think. I mean, you and I have discussed this at length. I do think it will go back. I don't see sort of a stagflation, right, type concept that we've dealt with in our past. At least I hope not. I have to imagine once people get back to work and once a lot of these unemployment benefits run out and things like that. I mean, these staffing shortages are incredible. I mean, it's not just the media, right? It's not just drive down any city in America and the for hire, help wanted, restaurants closing down, mills closing down multiple shifts or multiple days per week because they can't get people to work. Not to be morbid, but I saw a really interesting post the other day that said, what's not accounted for in the unemployment number is that 600,000 people have died, right? And not all of them were part of the, potential employment, but even if a couple 100,000, were in that number, we're not going to get that back, right? But I do think it'll subside. I'm worried about building materials, like selfishly. I don't know. Are people going to quit building homes? No. I mean, I think that's cyclical. There's still huge demand for that, and there's huge reserves of lumber. It's just that there's the mills were shut down for a while. But back to your point about the labor, do you think that labor costs will go up because of this? Because I've read that a lot of states who have lowered the unemployment benefits are seeing more return to employment than some other ones. I mean, that's the hope, right? If you're a free market capitalist, your pushback against the higher minimum wage is let the market take care of it, right? So the market seems to be taking care of it. Chipotle, your burrito is going to be more expensive because they have to raise their wages. Driver, I mean, kind of near and dear to our hearts, driver wages are going up. We know that for sure. I mean, that has dominated on the carrier side. That's probably like the number one news story right now is all these driver pay increases. So those will generally stick, I would assume. Wage growth has been abysmal in this country. I mean, that's not like an economic, that's just a fact, right? The wage growth has not matched the economic prosperity, whether you look at growth and market cap of these companies or any like earnings growth over the years. Wage growth has not caught up with that. So we're due for a catch-up period. How that manifests, I'm not smart enough or trained. That's not my area of expertise to know how that'll kind of translate. I hope the price of ribs and brisket go down. Selfishly, I got 3 boys, right? I'm gonna have to work a second job to feed these kids if the price of food doesn't go down. Yeah, and you can't buy a car,
right?
I'm trying to buy a car. Like I'm desperately trying to buy a car, and it's like you have to be there when the car hauler shows up and have 5,000 over sticker to have a shot at getting a pickup truck right now.
Don't you need a minivan?
Oh, please don't. Thank God my wife doesn't watch the show.
Minivan and 3 little child seats. I can see it, Ken.
I refuse to own a minivan.
Hey, Ken, I just quantified the wholesale beef prices that my wife's paying in the wholesale business, up 15% this year. So that's wholesale. 1.5 increase in the price of beef at the wholesale level in her catering business. So that kind of matches what Ken's talking about. But I might just add the other thing, Ken, and Chris, you can maybe answer this better than I can. There's kind of the gig economy, right? So we've had a lot of workers earning relatively low wages, doing multiple jobs. Do you think part of the labour shortage and wage increase that we're going to see is because people are pushing back and looking for a higher level, better standard of living and better wages because they can?
I would like to think, being a capitalist and free market guy, that people are always looking for the higher wages and opportunities, and people will work with those wages, but that fits their lifestyle, right? And so a lot of every Uber driver that I talk to, They're doing it part-time. Very few Uber drivers I've been driven by have said, this is my full-time job. It's always something additional. Whether that's a good thing or a bad thing, we could debate. But there is demand in the market and there's capacity in the market, so why not?
Got it.
Yeah, I have no patience for these folks that are like, on one hand, they stand on the pulpit of the free market needs to take care of things, and then belly aching that people want a living wage to work in the service industry. Like, I'll gladly pay $1 more for my kid's Happy Meal to ensure that the people working there have a living wage. And I think
here's the thing. When you look at minimum wage, the primary beneficiary of the raising a minimum wage is the upper middle class, because it's usually a teenager or someone who already is in a household with one or two more additional workers, and it's a side job. So most of the beneficiary is not to the single mother of 4 who's working this job. I mean, there's some of those, but the vast majority goes to the people who really don't need the increase.
Yeah, I'm not sure that minimum wage is the right mechanism. I'm just saying these,
I'm with you.
I think it will be painful short term, but I'm thankful that we're starting to see some movement in wage growth. Kind of across the board. So with that, we're running long. I just want to hit real quick. Warren Flynn asked, how's the Monday holiday impacting? So I think my take on it, you're having end of month, end of quarter, end of first half. These next 3 days this week will be insane. I mean, I think be nice to your dispatcher, maybe buy them some lunch, because it's going to be one hell of a ride through the end of this week would be my kind of, we can almost guarantee that. And then typically when the holiday falls like this, next week will generally be pretty slow. You might have some catch-up freight. You might have to deal with some stuff that transpired over the weekend that didn't make a cutoff. But my guess would be that you're going to see some trucks kind of extend their out of service into Tuesday and Wednesday. Dean, anything off base there?
No, I think you're dead right. If I was a shipper worried about capacity, I would make sure that I didn't have any of my carriers sitting under loads all weekend in a truck stop. Get them unloaded.
Get them unloaded, get them home, let them have one of those 64 million beers that need to ship, so they can be out of service for a few days. All right. Well, I want to thank everyone for joining us. Thanks, Chris. Really great conversation this week. Who do you have coming up on Freight Vine?
I have Roy Anany, who's a director at Chainalytics, who does a bunch of TMS implementations. We'll talk about transportation management systems, how they've evolved, and how a lot of shippers are hacking them so they can be more agile. So it'll be a great conversation. That gets dropped this coming Thursday.
All right. Well, you're sitting by the pool or sitting out in the yard, maybe put on the headphones and give it a listen.
Oh, heck yeah.
Am I missing anything, Dean, on your side?
I'll be on SiriusXM next Thursday. That's the Thursday after Independence Day at 8 a.m. on the Radio Nemo show at 8 a.m.
Great. I think that pretty much covers. You can check out Dean's market update on our website. If anything comes up over the next 2 weeks while we're out, you can drop us a line on LinkedIn or askiq@dat.com. But with that, my brain is sort of mush, so I'm struggling to find. I'm sure I'm missing something I was supposed to share. But with that, we're going to sign off. I hope everyone has a safe and happy 4th of July holiday. And I hope everyone's staying cool and trying their best to not get overheated out west. So thanks, everyone.
Thank you.
All right. Thanks, everyone.